Today, a crypto mine in Niagara Falls is forced to shut down. Google partners with Coinbase for cloud crypto payments, and Jeremy Sheridan of Prime Trust breaks down the state of regulation in a new report. Welcome to CNBC's Crypto World. I'm Kate Rooney. Digital currencies in the red again today by noon Eastern. Bitcoin traded just above $19,000. Ether, meanwhile, fell to $1,200, and Solana dropped to about $31. Let's get to the top stories. We'll start right here in Washington. I'm at DC FinTech Week talking with experts about regulation and the future of finance. There has been some confusion about who is going to regulate crypto. The U.S. Securities and Exchange Commission, the SEC, or the Commodities Futures Trading Commission, the CFTC. That agency chairman, Rostin Benham, is here at FinTech Week and weighing in once again on that issue.
I don't think that putting the commodity tokens, which in my view, at a minimum, we have a clear decision by a federal court for Bitcoin, several federal courts for Bitcoin. I've advocated or articulated my belief that Ether is a commodity and several other tokens are commodities as well. These commodity tokens should be regulated by the CFTC.
Crypto businesses are also looking to work with the traditional financial system and within that system, but some like Sheila Warren of the Crypto Council for Innovation say traditional finance has to adapt as well.
I worry that, if we try to port everything into our existing system without engaging in a reckoning, I think a critical reckoning with how that system has disenfranchised a significant proportion of the world's population because they simply don't have access to some of the identity markers that we've deemed essential, when there are in fact other identity markers that could be substituted in a meaningful way and in a safe way, I think. I think we have to ask ourselves, what is that balance? And how do we imagine a system, a regulatory environment, a policy environment, user experience, all these things that I think is creating a more healthy balance as the world has shifted and changed.
We'll have a lot more from DC FinTech Week on Crypto World tomorrow, so be sure to check back in. Next, a troubled crypto mine in Niagara Falls is shutting down. The local government issued a cease and desist order for Block Fusion's mine, saying the property was in violation of the city's zoning laws. Bit Digital, which hosts nearly a fifth of its mining rigs at the facility, said in a statement that the order came just days after a moratorium on crypto mining in the city lifted on September 30th. Piling onto that, an explosion and a fire at that facility in May kept power out until just last month. And last up, Google is teaming up with Coinbase. The tech giant announced a new partnership with the crypto exchange to let cloud customers pay for services with cryptocurrencies starting in 2023. As part of the deal, Coinbase will also transition some of its applications from Amazon Web Services over to the Google Cloud platform, and the deal is the latest push from Coinbase to diversify its revenue away from just retail trading. It recently announced a partnership with BlackRock to offer crypto services to the asset managers' clients. All right, on to our main story. Let's turn back to regulation. Prime Trust just released a new State of Regulation report. Crypto World's Tanea McKeel spoke to the company's head of regulatory affairs, Jeremy Sheridan, to get all those details.
You put out a report and you argue that there's a greater need for regulatory efficiency, more so than regulatory clarity. Explain that.
The State of Regulation report is meant to be a resource guide. It's meant to provide context and to some extent demystify the regulatory landscape and focus on three primary legislative initiatives that are being presented to Congress. And what I mean by regulatory efficiency versus regulatory clarity is that there is such a high volume of regulatory requirements in the industry right now. And to be fair, there are certainly points within those that need clarification. But for those of us in industry, we have to comply and adhere to that full spectrum of regulatory frameworks. And so it would be more beneficial, or at least equally beneficial in industry, to have regulatory efficiency. This notion that regulations will interlock to build a comprehensive and comprehensible and intelligible map for us to follow to empower digital builders while removing obstacles for compliance teams.
Okay, so how do we reach regulatory efficiency, and who is the onus most on to help achieve that?
That's the devil in the details. I think the onus is on first and foremost, a federal application of regulatory requirements. And I think the DCCPA, comes closest to achieving that initially, because they overtly state in that legislative proposal that if passed into law, that will supersede state requirements, which would be very beneficial, because what we have to do is adhere to state level as well as federal level and international level, but also an understanding amongst states, because this is right now primarily where the regulatory gaps are being filled. If you look at the Model Money Transmission Modernization Act, MMTA, sometimes called the Transmission Act or Money Transmission Act, that is intended to be a standardization amongst all states for regulatory requirements within digital asset industry. But what's happening is individual states are applying different requirements and state level interpretations on top of that act that gets us right back to square one of trying to adhere to, a huge number of different frameworks. So having a federal structure in place that would start congressionally with enacted legislation to create that universal standard and universal approach would be very, very helpful.
So as of today, it's a new kind of market. There are new products in the industry. And what is sort of the biggest obstacle for regulators right now?
I think there are two primary obstacles we're facing right now. The general concept of education and understanding is an umbrella around it, but in specifics, first is the mantra of same rules, or same risks, same rules that we frequently hear. Trying to apply current laws that don't account for the capabilities and expectations of digital assets and this novel financial ecosystem. I think some that are trying to be applied can actually be burdensome for larger crypto companies. You look at, of course, the Howey test is, the ultimate guide that is the biggest question out there, which is, a 90-year-old standard. But there's others that are more on an operational level, equally challenging to some extent. The 1980 Paperwork Reduction Act that can't keep pace with how fast crypto moves. The Freedom of Information Act from 1966 is a hindrance in terms of reporting obligations. Even the tax code from 1984, that's part of the Infrastructure Jobs Act that you mentioned, that's going to be applied, or at least proposed to be applied, to digital asset companies and their taxation and reporting requirements. Requiring the same reporting requirements as physical cash is really challenging to the industry. And I think that the second part of that, to answer your question about the biggest challenges, is the current narrative. We're all familiar with the misrepresentation and, in my opinion, the negative misrepresentation, misinformation surrounding the industry. I was a former federal agent. Due to my age, my investigations were credit card fraud and identity fraud. At no point in time did anyone question the legitimacy of the credit card industry based on the actions of those who chose to violate it for financial gain via criminal means. But that's what's occurring within this industry. And it's really challenging and frustrating to see that narrative continue, and I think be a barrier to sound, productive, enabling legislative process.
What's the most important piece of legislation that's in the works right now, and why?
I'd like to cheat the question and say all of them, because we are trying to have guardrails in place. It's really hard to play a game when you don't know the rules, and that's where we sit right now. So we're focusing less on which one or who regulates, and more focusing on the how and the importance of it. We talked a lot about the momentum and the positive indications, and they're certainly out there in terms of bipartisan approach and support of the industry. And so that's what we are really pursuing and putting momentum behind and support behind. We're not simply seeking regulation for the sake of regulation, but the right regulation, good policy, good law that achieves that efficiency that I talked about at the state, federal, international, and international level.
In the report, you highlight the big three to watch. That's the Digital Commodity Exchange Act of 2022, the Lummis-Gillibrand Responsible Financial Innovation Act, the Digital Commodities Consumer Protection Act of 2022. And like you sort of said, maybe the focus shouldn't be on these individual pieces of legislation and how they progress, but what should we expect out of the first half of 2023?
I don't think the door is fully closed on 2022. I think there is some enthusiasm and some momentum for the DCCPA that you mentioned. And I think there's recognition that, as you see some of these challenges that everyone quotes, as I said, in the misrepresentation of fraud, scams, security, and so forth, the recognition is we need these regulations in place. We need these security measures in place in order to help the industry grow, but also protect consumers, which of course is very important. So I think there's a slight chance that the DCCPA gets, out of committee and perhaps moved into a larger package, whether it's omnibus or NDA or others. But absent of that, in 2023, I think there's a lot of momentum for stablecoin legislation. I think that may be the first way to approach it because that is a more linear, logical process that sometimes is easily understood in terms of tracking reserves to actual tokens, and it's a cleaner and more achievable process that will be the foray into more complex and all-encompassing legislative actions that could follow.
Okay, that's it for Crypto World today. We'll be back again tomorrow with a lot more. We'll see you then.